Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. All right, happy Wednesday. We love Wednesdays around here. It's the day we do our live stream. I still don't have my background up, so sorry. Life's busy, you know? But glad to be here with you guys. It's time to talk about what's happening in the market. My home base, if you're listening on other channels, definitely subscribe to the free channel on cryptoinfluencers.com. This is my home base. This is where it all happens. And the pros, we have a good time. Man, it is pretty cool. I got some real fun feedback this morning. Some of the pros were talking together and they're like, I joined a handful of different things, and a lot of these other groups, they're just really emotional. They're really short term, lots of hype, and they're just up and down. And we just sit back and we're calm and collected and analyze the crap out of everything. Really go careful, and it's really good. It's good conversation. So, Charlie, hey Calvin, happy FOMC day. No kidding, it's like a holiday right Ease up, Chairman Powell. Thank you. So, but yeah, this is the home base. And then obviously Wednesdays, 12:30, we do live streams, and it's fun to get some feedback. If you have any questions or comments, definitely put them in the chat and we'll hit them as we go. So what we're looking at right now is the 1 minute chart with Bitcoin on top, Ethereum in the middle, and S&P on bottom. And the announcement came out. The interest rate is 5.25 now, so it went up another 0.25%. And of course, you have your usual swings where the market gets all crazy for that 1 minute, and then things kind of chill. So honestly, if you look at the close of the first minute, that kind of gives you an indication of the gut reaction, and we're really flat. This was expected for a long time. I do follow this, the probabilities for the target rate, and it's been weighted in favor of a 0.25% interest rate hike for the entire month. Like, nobody is surprised by this outcome. Nobody's surprised by this. And in fact, if it's fully 100% marked, like if the expectation is already baked in, then markets should not move very far, because markets really only react to missed expectations. So if they under-expect something or over-expect something, then that's when markets will really move. In this case, and it's been that way for the past year, I think Chairman Powell has definitely been pretty transparent. He's been saying, hey, we're going to do this, and then he does it. So the markets haven't been surprised by almost anything that's happened. The surprises came when banks suddenly started going down, and all of that kind of started coming out. So since our live stream at 12:30, so that would be this candle here, now we're doing the press conference. So while we're in live stream, the markets are going to be reacting to his attitude, his comments, the way he's answering things, whether he's optimistic, pessimistic. People are just reading everything. Every single word is being weighed right now. And in my mind, if I just ignore the charts and somebody tells me that, let's just say we put away the charts and we just say, okay, for a month we've been expecting a rate hike. We know that there's lots of turmoil in the markets. Banks are struggling. there's almost zero, there was 0% chance that we'd go up by 0.5%. And so that wasn't even on the radar. The expectation was up by 25, and just not doing anything would have been, very, very low, but the markets probably would have jumped because markets are getting beat up with these raising of interest rates. Well, the fact that he's raising the interest rates, it's going to be, I actually considered this to be bearish. And you never know. You never know until, the market reacts. The market tells you right away. But it felt to me like people know that there's a storm coming. And the fact that we're raising rates anyway, it might be that we're raising just to kind of keep that signal going that they're trying, but that perhaps, he'll pull it back down just because he might have gone a little bit overboard. Well, so far, we're 10 minutes into this thing, and we are, 7 minutes, and things are selling off pretty good. So let's dig down into this and see what's going on. So, by the way, leading up to an FOMC meeting, if you see the market climbing, what is that? Oftentimes, it's misdirection. The whales have an agenda. They're trying to get people pumped, and so they're moving the market a certain way before the news comes out, and then they pull it the other way. We've seen this 100 times. So when the market started moving up, leading up, it was someone on our pro channel that pointed that out, and I was like, oh, that is very obvious. That is so true. We're probably going to start selling off. So anyway, everyone that's been following my channel for more than a week knows that my current sentiment on Bitcoin is bearish. So let's head over to the daily. And I've put a few extra lines on here just to kind of show you how critical the next 3 days are. There's a lot happening here. A lot. We have a declining resistance coming down. We have a flip from support to resistance, which this is our bull trap. And I stand by this as a bull trap. It's a bull trap until we close above it. And so currently it is a bull trap, and I expect it to continue to be. We have a 20-day moving average that is declining, and we have fallen through it. So we tried to hold it for support for a few days. We're down below it. And we also have this. This is our trading range from the buying climax. So we had a buying climax. We got up into this trading range, and we've been in this range for a long time. So the top of this range was resistance. It should become support, but we fell through it. And now we're all over the map. Like we're up, we're below it, we're above it, we're below it. So this is a pivot point. This is now a pivot point for us. And at some point we're gonna let go of this line, and whichever side we let go of, it's going to be a strong move in that direction. So this line is at play. We also have our increasing support coming up this way. And we do have 3 touches. We have a swing down here, a swing here, and this swing here. So we have 3 touches on this line. And then that's not to mention our 50. Now yesterday, we closed in the green zone. So we are back to a green zone, but do we consider that we're fully out of the woods? This yellow zone is kind of a danger zone. Once you start messing with the 50, it weakens. And we've been on this thing for 3 days. So we've touched it for 3 days here, and these were long wicks, just barely touching it and then bouncing off really, pretty quickly. These are candle bodies. So we're getting sucked in here. Candle bodies all over the 50 is not great. We also have, this candle still needs to close. So this one is still being printed as we speak. But we have our 50 rising, and you can see that with all of those things, we have a climax that's about to happen in 4 days that something is going to break. And it's not going to be too long. So, Dilemma, hello Chief, thanks for joining Dilemma. And Charlie, bring on the discounts. Yeah, if our prices are dropping, it just creates better entry points. Jake, feel like we'll get a daily close above that top range line. If we do get a daily close up here, it's going to be pretty strong. But the disadvantage of closing up here is that we have not had a pullback. Pullbacks are kind of the setup for the next strong move. If we simply closed up here and started, working on our way up out the top of this, it would not be as strong as if we came back, found a solid support, and moved. So there is a problem with the formation of this chart. There are some holes. There's a hole on the daily. Our lowest wick right here has not intersected with our highest resistance back here. So there's a hole in the chart right here. And this really, to have a strong bullish structure, we need to pull back and intersect those wicks. If we go to the weekly, the mid-range line, sorry. Jake meant mid-range line. Let me go to the daily. Yeah, so far it looks like we're trying to hold it. This line is 28,450. We'll just say that. And then we'll get down to it on the 1 hour. We've spent the last 2 hours above it. We spent the prior 4 hours below it. So we're definitely battling this line. Are we above? Are we below? We're kind of working that out. But it's an important line. You can see how it's been perfectly at play right here. Sometimes the intraday doesn't quite tell you the full story, but look how many hours we found it as support. It definitely caught us on this drop here, and we stayed above it. And when we got right on the line, that's when we broke below. And we stayed well below it for quite a while until we popped up through here, and we've had a lot of support. And the price action has been very careful to stay above this line until a big drop. And now this was our first resistance, but it just feels like there's a struggle here. Yeah. Anyway, we just have to wait for more information. We need a close at the end of day, and we need a few more closes. Okay, so I'm gonna head back to my original thought that I was working on. And that is, look at the hole here. Even if we don't worry about wicks, because the wicks will translate on the daily and the weekly, but look at the distance between the candle bodies on the weekly. We have a huge, huge gap here. And not that we have to have a candle body close on them, but usually you'll find that the chart is stronger if you can get these to match. This is a $3,250 gap from our lowest close to our highest close before this whole move. So there is a hole here. There is definitely a hole here, and the hole can exist. I mean, we could drop back and do a wick on these and just close that without any problem. But we would most likely find a candle body land on this 200. So this is kind of one of the places that I would definitely expect to see this. Charlie says that mid-range line is coincidentally the 0.2 fib line when you plot a retracement from the bottom wick on March 10th to the top of the wick on April 14th. Let's do that. Let's see. I think this is a Fibonacci. Nope. Okay, fib. All right, let me line that up. You said March 10th, which would be this wick here. And you're talking about this here, I assume? April 14th? Yeah. So it's very close. Yeah, 0.23 is this line here. It's a little below. I wonder if maybe it lines up differently on a different chart. I'm using Binance because of the it's just kind of the highest volume. Its numbers will be most precise when the greatest market participants can vote on the price. So you're always voting with your dollar, with your money. That is an interesting number though. This 2.3. because look at this. It caught the top of this candle here, which was pretty big. Technically, this didn't exist until this line here, though. So the retracement, it's kind of missed a few things. But this was definitely a switching point here. Yeah, I don't know. Could be useful. I think that the support. I think this is definitely the flipping point, though, for sure. So it'll be interesting to see how this plays out. Let's see. Jake says, if the dollar is rotating out of Bitcoin for a period of time, where will it go? So on a Bitcoin USDT price chart, if people are selling Bitcoin, it's flipping into USDT, and it can remain in that state for a long time. If people are trying to cash out, then they'd have to go to like, what is it, Bitfinex, and cash in their USDT for USD. There's some process for that. I don't know what it is, and I'm not the guy that's trying to do that that switch. But those dollars can sit on the sidelines waiting for the next opportunity. So it's sort of a game of what's the circulating supply and what percent is sitting on exchanges versus wallets that are cold wallets where people are kind of keeping them safe offline. It'd be hard to, probably a company like Glassnode or something probably looks more at that. But whenever I have USDT, I'm hanging on to it, looking for an opportunity. If people are impatient, then they're going to put it back into the system, and then it'll be in the hands of someone else. Just how market works. But yeah. So anyway, we've got a hole. We've got a hole on the weekly, and it's a pretty wide hole. On the monthly, we still have a hole. It's even wider, but it's less important. Monthly, a lot happens to strengthen these candles intra-month, and so they can kind of get there. But if you wanted to be really technical, our line is here. Our close was 23,293. 23. $293. So this is our absolute line. This is our breakout line. We broke out really strongly, and last month we had a pretty weak month, but we have a candle body gap that is $5,000 below us. Not to say that we have to close every one of these, especially when you get onto these bigger channels. You don't have to. You can still close it through a wick, and our highest wick here is 25,211. So if on the monthly, if we scooped down, I'm ignoring this wick because this is part of the move up. This was our first true bottom and swing high, and then continue down. So this wick here is more important than this wick. So if this one is 25,211, we could have a candle body pull us down, get a wick down to 25,2, what did I say? 211, and it would be perfection. I would be so bullish off of this section right here. And look at our 50. Our 50 is at 25, almost 80. 25.80. So if we got a candle, if we had a wick that came down and got in the vicinity of this wick right here, we would have absolute beautiful, perfect support off of this. And this is the type of move that puts you at 40 and 50,000. Like this setup is money. It's so good. And lucky for us, even though this was kind of a weak candle, look at our upside wick. It was 31,000. That means that if we do have a breakout of some kind, it is more than likely that we'll see 31,000 again, because the best structure will be to pull back to this. So a lot of times traders get really impatient. They think something's gonna disappear and it'll never come back. The odds of something just taking off and never coming back is just like 1 in 1,000, probably maybe even less. It's very rare because the right markets will always come back and find support. So there's this kind of mythological gap that people talk about, that we have to close the gap. And they talk about all these things because over the weekend, news happens and markets jump and it creates a gap, especially on the traditional markets. And they say how often these things close. Well, it has nothing to do with the gap. It has nothing to do with the fact that markets can jump and move really quickly. The reason gaps get filled is because of support and resistance. It's not because of the gap. Prices will touch the same price point many times. It's just that a gap makes it more apparent. But most often you're going to cross the same price many, many, many times. Many times during a month, many times during the course of trading. Over the course of years, there will be so many crosses over that for every move to the upside, there was almost a 99% chance that you'll be able to catch it on the other side eventually. So anyway, that just kind of helps you keep trading in perspective. It kind of keeps your FOMO down. So when you have a move that's really fast, you think the market's really on the way out, we've really moved up strongly, and you think, oh man, yeah, if I don't buy now, I'll never get back in, or I'll miss it forever. And then the market always gives you a chance. Like, you often have chances to come back in and capture a trade. So just really want to be very careful. Mohammed, Adil, nice to have you join us. Hey man, your analysis is good. Thank you. There was a guy named Mohammed, maybe you're the same one, that was kind of asking me about risk management. So yeah, risk management is a complete science. There's so much involved in it, and there's so little time devoted to it. But yeah, I'll switch gears there and talk about that. So yeah, just talking about those gaps on Bitcoin. What we have not done yet is just looked at Ethereum. There's a little less to look at on Ethereum because of the fact that it's going to be following Bitcoin. Unless there's a real strong drop in Bitcoin dominance, if this really drops, suddenly Ethereum can be its own market. But right now we're absolutely ranging. We've been in a very, very tight range for almost, a solid month and a half. So we're tied to the hip with Bitcoin. Whatever Bitcoin's going to do, we're going to be doing. So that's definitely going on. So Mohammed, awesome. Yeah, it was me, and he was talking about leverage. So there's this, as if trading wasn't volatile enough, they're like Mexi and others, they'll give you the option to 200x your leverage. Now that can be a blessing or a curse. My strategy with leverage is that I'm not interested in the amount of leverage. I'm interested in the exposure that I have to a position. So if I'm trying to, if I'm trying to put like $1,000 into a coin, well, I can do that with a full 1,000, or I can do that at 100x leverage for $10. And my philosophy on leverage is that the amount of exposure is the most important part, because when I put $1,000 buy in, and the market goes against me, I'm going to need $1,000. So you shouldn't be even putting that position in unless you have the ability to cover. But when you've figured it out, when the market finally goes your way, when the position is right, during the good times, you suddenly have a $1,000 position that you're only paying $10 for. And in my mind, that is fantastic, because if you trade with stops or however you do it, you could put in a stop at break even or more, and suddenly you have $990 to put into a different trade. So that's my philosophy. I use margin to reduce my risk, and what I mean by that is I don't have to have $1,000 on the exchange all the time. Exchange risk is real. For everyone that went through the FTX, and anyone who's been around as long as I have, who got killed by Bittrex and MTGOX and Poloniex and everybody else that went bankrupt and stole everyone's money. Having money on an exchange is dangerous. The exchanges are way better now, but it can still happen. Look at FTX. And who knows what regulatory changes can happen. People could seize this and seize that. It's just risky. And so if you can still get your full $1,000 exposure, but only have $10 on the exchange, that's pretty sweet. So anyway, that's my kind of spiel on leverage. So some of my trades look really funny. I just closed a trade on INJ recently, and I think it offered 200x leverage, and my exposure was, handful of dollars, and my so the amount I was putting at risk was 100% gain. So I doubled what I put at risk, but because it was in the green and I put up so little margin, my percent interest gain was like a 10,000% gain. And so it's funny to see numbers like that, but what you're doing is you're just when you're right, you still have all your capital and you're right. So that's pretty sweet. So that's pretty golden. All right, let's go look at some of the other questions. Interest rate high by 0.25%. Is it bullish or bearish? I felt like the market already priced in a 0.25% raise, and that it would be the other aspects of the market that would dictate whether it was bullish or bearish. And I think with the banks going down and a lot of struggle in the market, I'm seeing a lot more reason why the market would be not thrilled about breaking even. So the market's sort of reacting like that. Looking at the S&P, we were trading much higher earlier, and we're sinking down pretty good. 5-minute chart kind of tells you. So here we are, being super volatile. Currently we're a little bit low, and recently we've had some pretty low wicks. But yeah, I think the market's still deciding whether it's bullish or bearish. And part of that is the press conference that's happening right now. Apologies. 0.2 fib line. Oh, and you had log scaling disabled. Okay, that's all good, Charlie. You're right, though. The line's right in there. It's definitely a flipping point for sure. Okay, Mega Arb wants me to look at Arbitrum and Optimism. Let's see. I think I'm gonna have to find. So if Arbitrum, I'm gonna see if there was a better place for. So this thing trades on Binance. Let's and maybe this isn't the best data. Let's go take a look. Yeah, there's more information here. Mexi just recently added them. They've been adding everything lately. Wow, a lot of history. Oh no, I'm on the 5-minute. Okay. Okay, I'm sorry. All right, now we're banging on all cylinders. All right, this is what I'm looking at with Arbitrum. So really it is a fairly new coin. The first thing that I see is that we have had a pretty strong trading range down in this area. And the beginning of this started here. And we're finding support on the top of this now. So this could be a place we take off, but I'm always very leery of meme coins or coins that are too young. Coins that haven't had their first real hype cycle. They haven't shaken out all the people and really found true price discovery. So right now it's still fully emotional. I think if Bitcoin and others drop, it'll just fall right down. If Bitcoin and others get going, then it'll probably find support here. So this coin's just too young. I see kind of an inverse cup and handle, so it's super weak from a structure standpoint. So there's that, plus kind of a descending triangle. Those are both bullish or bearish. The greater than 50% chance is that we don't hold $1.31. We're probably going to head down from here. But we're right on the decision point. You can see how we're like right. Like very, very, very much. Yeah, if I just put it on here, you can see that we're just right in the mix of this. So if I take out the candles and just do line, you can even see it even clearer. Look how tight we are. We're right there. Like you can't even, within a day, it has to break out one side or the other. So anyway, that one's coming up. But I would still put a greater than 50% chance on heading down. Optimism, let's see. OP, do you think I have enough information here? Yeah, pretty good. So OP has a level right here that we're staying above. We are definitely consolidating sideways and sloping down slightly. This is usually positive. If you have a decent move and then you don't fall off a cliff, your bearish impulse is weak, then that means that the bullish impulse will be more powerful. So would I say that it's time to buy this? Not so much. We're kind of right on the edge of a cliff. The line is, so this line I think has resolved. I don't think it's going to be super critical anymore. Oops. Wow. Pushing buttons over here, sorry. Okay, this is straight from here. And we found support. We had kind of a little weird thing that happened here, but then regained support, and we're kind of floating above it. As long as we can hold this, we're probably in decent shape, because we've already done enough to confirm the support off this resistance. But there's a case to be made that if we do it too long, that it weakens. So we've done this for so long that the 50's crossed below the 100. The market's kind of fatiguing. So if Ethereum drops and we lose this line, it should go down for a bit. I don't see a lot of really strong buys in our market. Almost everything I'm looking for exits right now. So that's kind of where I'm at there. Mohammed Adil says 10,000. I forgot what our conversation was, where that came out. But anyway, do you mind looking at Casper and see where you think the next higher low will be? So yeah, we can look at that. SPR. Let's see. I'm not sure the best place where this trades, but let's try Gate. All right. Interesting first day. Yeah, so this thing was kind of born in the bear market. So it hasn't had a hype cycle. It's been kind of sold off ever since it began. Pretty strong support here, which is definitely strong resistance now. And we are testing the breakout of it. Have we ranged long enough to get there? I don't know. We've definitely come back for support really well, but the problem is that we're just a little bit vertical. We're pretty vertical. When you're this high off your 50, even coming back for support is a little wild. It really needs to consolidate a little bit longer in an upper range. See this move here, how we just consolidated for a couple of months and slowly dipped down to just kind of say to the bears, you had your chance, but it was pretty weak. Then you ramp up and you take off. But we kind of need to do that again. And we would want to find support above about 0.477. So if we were able to kind of chill out and do some good consolidation and slowly reach back down and touch this, that would be a recipe for a third leg. And this is getting close because you've got one strong impulse, a second strong impulse. There's probably one last one, and that's probably it for a long time on this particular coin. So that's what I'm seeing on that one. What meme coins are trending? Yeah, I don't know. There have been some that I've seen. I think the Pepe coin or something. I ignore it all. I'm not really a trader of the meme coins because there's no structure. It's pure emotion. Oftentimes whales are in charge of those coins, and they will push them and pull them, and it's very hard to. There's no price discovery. You don't have a range that you know generally where the price has been and where we're going. So it's really you're really throwing darts blindfolded when you're trading meme coins, because there's just nothing there to go by. You don't know what the rules are. You don't know what the parameters can be. All you have to do is go by short-term indicators, and they're really hard to trend, because I've seen a lot of meme coins that'll just rise, and in a matter of one day, you can wipe out 50% of the gains, just gone. And there's no planning for that, because a whale has complete control over that market. So I'm a big fan of letting markets cool off, that we have a full year on the coin. The coins I generally trade are the ones that are in the top 100 that have been around for a while, not newcomers, because those ones are pretty hard to, they're still undefined on their ranges. Since you have the chart up, what do you think that third leg will go to? If we had the right structure, usually there's generally a guess that it would be a fairly symmetrical move. This move was 70%. This move was 80%. If we were able to get support here and move 100%, I'd put a target of like 9.5 cents. It's probably the best this thing could do in this move, in my opinion. It's usually how that would work, but we're talking wicks. Like, this is absolute best case scenario. You don't want to trade on best case scenarios, because you're not guaranteed to get that wick. So I'm kind of a big fan of taking profits along the way here and there, just to make sure that you've got something in your pocket in case you do get that surprise drop, because every coin has a history of that, and especially more well-known coins, especially when you get vertical, you'll get a drop pretty quick. The fear candles are more intense than the hype candles. Hype candles are usually whales, and they push something up and get people excited about buying in right here, and then they'll just drop it out, and then retail's bringing it down with all the fear. So that's how that usually plays. It's pretty rough. Let's see. If US does default in June, will it cause a quick crypto pump or dump? That's a great question, Mayweather. The funny thing is as much as we would think, as much as we wish that Bitcoin was its own independent market, and it was the true safety and security for the entire world, when shocks happen in the broad economic system, the majority of people that hold Bitcoin are average people. You and me, companies, just the usual people that you'll find out there in the rest of the world. And so when the rest of the world is struggling and they need cash, or they need to pay bills, or they need to eat food because the market just blew up in their face, they're going to sell. So in a perfect world where Bitcoin was global reserve currency, it had 99% adoption, it was essentially the new world currency, and the rest of the world can go up and down and do anything it wants, but we're buying and selling and transacting and earning wages in Bitcoin. It's going to ignore anything like that. It's not going to care about fiat. But in our world, where people need fiat to eat and to do the basic things, it's going to react with the rest of the market. So if we did have a quick and intense broad market shock that dropped markets pretty quickly, unfortunately Bitcoin will probably go with it. The people that have liquidity, that have the ability to kind of capture moments like that, those are the guys that are going to really capitalize, make some money. So yeah, it's hard to read, because Bitcoin has only existed in a bull US market. The broad markets have only been bullish. We don't know what it's like at the bottom of the recession for Bitcoin. And everyone can point at, because everyone loves to take Bitcoin and look at the historical behavior and look at all the cycles and all the things. This is the emotions when the market is going straight up. The emotions when the market is going straight down and having a major recession is unknown. We have no idea how it's going to react. Most likely, though, it will have some downward pressure. The only hope will be that markets will be thin, that there's so many individual holders that have pulled off money off of the exchanges that it still could be, hedge funds and stronger companies that dictate price. And depending on what their opinion is kind of where we'll head. And if it's stronger than the rest of the market and it becomes more of a flight to safety to go to Bitcoin, it could absolutely do really well. But I say that's a very small chance. Very small chance. So what we're looking at here on this Bitcoin monthly chart is the emotional expression of a volatile asset that is not fully ingrained into the world's psyche quite yet. Only in the last month have we started seeing the reaction to Bitcoin when the banks get announced. And when the banks fail and they get announced and Bitcoin pumps a little bit, that's the smallest, tiniest little indication that the world's starting to get it. But the world's really far behind. And so it'll be probably a decade or more before Bitcoin can really withstand some of that global turmoil. So anyway, good question. Awesome question. Mohammed asks, I don't think USA is going to default because they can print dollars as much as they want. Yep, I don't think they'll default either. I think they love to take it to the very last moment and threaten this and threaten that to get their political agendas, taken care of. But I just don't think anyone's got the guts to let that default. And if they did, it would be very short-lived because the day after or a week later, they're gonna pay back everything with interest because they just can't. What's going to be scary though is that now that the debt, we were looking at the amount of U.S. debt versus GDP, and I think we're at 120 to 140%. I think 123 or something was the number. We're 123% of GDP in government debt, and once you get over 100%, it starts getting really hard to pull the rope back in. It's kind of getting away from you at that point. And if the debt is so high that you can't manage it through taxes, then you have no choice but to print. But printing means you're shilling out your debt to everyone else you're diluting the money supply, and you're disincentivizing the prior buyers of your debt to buy more because now there's more to buy and their holdings are worth less. So if you dilute your biggest buyers, they're going to start looking for other options. So this game can't play forever. It can play for a long time though. I mean, it's played for 100 years. What's another 100 years? Well, above 100% GDP it's getting there. So I talked to a friend that's he's in the old world. He's in the finance old world. He still thinks that we could play this game for 60 or 70 or 80 more years. And he might be right. It feels like every Fred chart I've seen, though, is like hockey sticking up in the last couple of years. So when you've got 100 years of data and the last 3 years is absolutely the weirdest anomaly that we've ever seen in the last 100 years, it kind of feels like something's about to break. So I have a lot of, it's kind of tough. What do you do, right? So if the whole world, if the U.S. markets really take it in the face, the U.S. dollar starts inflating at a higher rate, and a lot of the trust and faith and interest in the dollar globally starts dropping, it's going to drop the rest of the world. It's not going to be good for anybody. I know these other countries are like the BRICS countries are trying to find an alternative, but if they hurt the U.S., it's going to hurt the world. And it's sad, but that's the way it is. We're a global economy. We're not we're not independent economies anymore. And so if the world goes down, where's the flight to safety? Where are you going to head with that? Because even keeping dollars is bad. You're like, oh, well, I can't hold stocks. I can't hold bonds. I can't hold anything like that. I'm going to have to just keep in cash. Well, if it's hyperinflating and you're losing 10, 20% per year, your cash is not going to be very good. And so it's hard assets that you're going to need. And, I always recommend just for, if you don't have, 6 months of food on hand, remember the COVID thing that happened and suddenly the grocery stores were just gone. Well, you might as well have something. You know what I mean? I'm not trying to say that any of this is imminent or anything. It makes me a little nervous when you see these things kind of adding up like that. But it's just common sense that in a world where we live in, that everything is so tied globally, where supply chain can be disrupted and suddenly, the whole world landscape has changed. You should have 6 months worth of food supply at your house, and you should just be able to weather those types of storms. Hedging risk is a market behavior, but it's also should be a personal behavior. You got to make sure that you've got a supply of cash for a rainy day, and you should make sure you've got food and things in case something really wacko happens. And of course, we don't expect it to happen, and in our modern world, usually breaks are fixed easily or quickly, but it doesn't hurt. So there's my 2 cents on all of that. So the solution could be Bitcoin or gold, and that's tough to say because I think even gold will struggle if the entire market drops. If we're in a market where inflation is high, then Bitcoin and gold are going to be welcome alternatives. But even 5% inflation is not insane. It's not so painful that you're rushing to Bitcoin or gold. Argentina, or these others that are having 100% inflation, they're looking for gold and Bitcoin like crazy. Like that's like a gift of survival. But 5% is high, but it's not insane. We haven't experienced insane quite yet. And if the market drops, it won't matter what inflation is. Everything will drop with it, including gold. So that's how those markets go. I'm going to look again at the 1 minute chart. Let's see. I've noticed that we've dropped a teeny bit. So our FOMC meeting started here. 28.6 was our end of the first minute. And the markets had time to digest and we're kind of slowly pulling back. So that's interesting. We have 4.5 hours left on the day. And we are staying tightly in this triangle. This will be a photo finish. Mohammed says here in Pakistan it's 47%. Yeah, I bet you're loving Bitcoin. Gold and Bitcoin would be way high on my priority list if I lived in a 47% inflation. Yeah, so that's kind of the economic interest in the United States. It's you hate to have to pick between the shinier of two turds, right? But and the U.S. has kind of set itself up. It's in a place where they do have a lot of power. It's not fair, and it's frustrating, but they do. And so if the shiniest of all the turds is the U.S. dollar, and the US dollar struggles or suffers or drops or loses value or hyperinflates, the rest of the currencies in the world are going to major hyperinflate. They're going to be way worse. I know eventually, markets have a way of healing. It always just takes time. But if every country's got a shovel and they're digging a hole as deep as they can, and the US starts digging a hole and everyone starts digging faster, everyone's underground, you know what I mean? So it's going to take kind of a paradigm shift or a reset of some kind to kind of get out of that scenario. So I don't know what all those scenarios look like, but I'm certainly interested. I'm always watching for little clues on how things work and what could change the dynamics. But yeah, it's a very, very complex world, and even though Bitcoin could be the solution, it's supposed to be the solution, it's not. It's only an infant right now, a 10-year-old asset that just kind of came out into the world. It's going through its bumps and bruises. Where the world is fighting it so hard. What drives me nuts is the U.S. government fighting it so hard. I mean, when the most pure form of money, the peer-to-peer, permissionless transactions, the most free currency that has ever existed in the world, most transparent. It's like level 100 on perfect currency in the world. And supposedly the most freedom-loving country is fighting it that hard. There's some corruption going on. It's not pretty. So I'm rooting for Bitcoin big time. Like, I really want Bitcoin to kind of take us out of this, because the more we can use something that's neutral rather than something that's a political weapon or something strongly political, the more freedom it'll grant to the world. But the biggest obstacle in the face of crypto right now is the US government. It's unbelievable that those words are coming out of my mouth. The most free country is fighting this more than anything else. There is some serious corruption problems in the US, and also there's some control problems. The US is losing control. These rate hikes and the interest rate and the printing and the banks struggling right now. We did this in 2008. And all we put laws in, and we did all these different things. We even put a circuit breaker in the stock market so that you could, if things were going too fast, like things wouldn't unravel completely. It would give, they did things to they tried to implement changes when 2008 came along. And now we're coming through the same exact scenario, but it's like a 10x of what we were dealing with before. And is the world any more prepared for it? No, man. The only tool in the closet is a hammer, and everything's a nail. All we're doing is just hammering out on raising interest rates, even though, we're trying to raise interest rates to pull down inflation. And inflation, raising interest rates is killing banks. So we print money to save the banks, and the printed money causes inflation. So we raise interest rates to fight inflation. We're playing whack-a-mole, and the U.S. doesn't have the control they thought they did. And we did, I'm in the U.S. So, yeah. And so Mohammed asks, is China taking over? Well, I think China's even further behind. Because when you have a country that's even more corrupt, that has such a history of manipulating their own currency, this entire time that we've been trying to drop our M2 and do the interest rates and all these things to try to pull back down on our M2 money supply, China hasn't even flinched. They're just printing like crazy, and it's tough. I don't know, I probably said this recently, but China's really good at stealing tech and producing it cheaper, but they're pretty tough on the new innovations. They don't invent a lot of things. They usually take existing inventions and make them cheaper. And so it's hard to really take over the world when you're not on the leading edge of new breakthroughs. I think the newest invention they ever came out with was TikTok, and it's a way of spying on people. I won't go there. We won't talk about that. But it's kind of interesting. You can tell the agendas. Most of the BRICS countries have very, very challenging internal corruption problems. And they are the duller of the turds. And they're not the solution. So anyway, it's an interesting situation going on. Charlie says, ban lobbying and politicians from buying and trading stocks. Problem solved. Yeah, if you could ban lobbying, it would be amazing. The problem is that politicians usually rise to power because they have an agenda. They're looking for, they're in the most altruistic sense, they're trying to create change. They're trying to find a problem and fix it. And they're asking for their population to tell them what other problems they can fix while they're there so they can retain their power or whatever. And the lobbyists are these groups that are shouting the loudest. And usually the donations is the problem, because when you are paying a politician to stay in power and they have to return the favor by pushing your agenda, that is a major problem. But it's almost built into politics. It's tough to separate the two. And I kind of had this conversation not long ago with somebody else, just talking about the people that are interested in being in a position of popularity and power. Those types of people that kind of seek for that are usually people who are more about their own selfish desires. You don't see very many politicians that are truly there to make the world a better place. They just love being in charge, and it's just that kind of personality that rises to those things. The people that don't care about being in charge, they're never in charge because they don't have the kind of that cutthroat attitude to get up there and be in charge. You know what I mean? So it's really a tough thing to balance, what's best with the people that get into those positions or who are interested in seeking for positions like that. So, but yeah, at the very least, why do politicians have the ability to buy and sell stocks? That's insane. I saw yesterday that there was a bill that was put out to stop that from happening, and man, I hope it passes. It's a no-brainer if they're remotely, not corrupt, that they would stop that, because it's crazy. Time to migrate to Mars. Yeah, well, thing is humans are humans. If we can't figure it out here, we're not going to figure it out anywhere else. So, but there are some positive things. I hate to be sitting here just dooming and glooming, because I didn't really know Elon Musk very well. I never followed him or wasn't too interested in what he did. But what he's done with Twitter and making it as transparent as it is unbelievable. It is like such a breath of fresh air that there's one platform that the hands and the lips of people are being untied. Like, it is phenomenal. I feel like it's a step towards global freedom more than anything else. And so there are some things that are happening that are very positive. And if you can get people with the freedom of speech globally, man, that takes a big step in the right direction for changing some of these problems. Charlie says, those who seek power are usually the ones who least deserve it. Who deserve it the least. Yeah, it's human nature. It's pretty tough to find someone. You almost have to assign someone, and they have to rise to the challenge. But it's just in human nature that when you're in charge of something, it goes to your head. It takes a special person. Calvin for president. Oh man, don't wish that on me. Appreciate the comment, 13th original though. Nice to have a new voice in here. That's awesome. Well, look at us, 28,341. Our switching line has been 28,459. I was watching it for yesterday's close. We were hovering around it, and then we popped up right before close. And now we're back down. Make no mistake, if we close in the yellow zone, which is so close, 28,305 is our yellow zone breaking point. If we close in the yellow zone, we are likely to drop 10%. It will be the healthiest thing for Bitcoin, though. Don't fight it, guys. Don't fight it. It's good. So Nancy Pelosi is the best example of trading. Yeah, man, if every trader was as skilled at reading markets like Nancy Pelosi, we'd all be millionaires. Lancey's like, it's not me, it's my husband. I am innocent. Yeah. There is a lot of corruption. When I was doing my Masters of Finance and really getting closer and closer to what Wall Street is all about, I had to back out. I just couldn't do it. Have you guys heard of a synthetic short? So you have insider information. You know a company is got some bad news and they're about to publish something that's going to ruin their stock price. There are companies out there that will take a short position in a mutual fund, and they're very careful to make sure that the company they have insider information on is in that mutual fund, and then they'll synthetically buy the rest of the other companies in the right proportions in their portfolio, and it neutralizes every exposure except for that short exposure. And there are groups and companies that do this in a very, very sophisticated way so that it can't be easily seen. It is illegal, but there are groups that do this all the time. And when I kind of discovered that everyone with an edge has a disadvantage, has an unfair advantage over the rest of the world, it really it turned me off to the whole thing. I definitely got more into the corporate finance and data mining. I love stuff like that. So I had a good old time doing that professionally for a long time. But once I discovered Bitcoin, where money supply couldn't be manipulated, price can be manipulated, but not money supply. And you can't take what's mine. You can't take my percent of the total market supply that I bought and put on my own hardware wallet. Man, that changed everything. Like the dynamics of my opinion on what to put my money into just completely 180. I was like, well, I'm all done trading traditional stocks and anything else. I'm going straight into Bitcoin because at least the game isn't rigged, So yeah, I've got quite an opinion on all of that. But yeah, price is still manipulated, and thinner markets allow whales to push prices around pretty good. But as the little guys, you and me, buy Bitcoin and pull them off exchange and keep stacking that and keep building it up, what a retirement it will be when we're all 65, in a couple decades, or in depending on where you're at. Bitcoin's going to be in an amazing spot because you can only artificially hold something down for so long. When people realize what it is and it becomes easier to use and grandma can get into it, yeah, it is definitely a game changer. Charlie says, thank you for everything. Hope you have an awesome week. Appreciate that. Yep, I think we're just about there. Yep, an hour. Okay, that was a fast hour. It's fun to talk about all this. Today is a Wednesday, so we're definitely having a wild day. But my portfolio is expecting a drop. The reaction from FOMC is a little bit of a negative. We're dropping a little bit. If we can get one final flush out and find some sweet footing right around 25,000, we'll be in a good spot to move up again. And then the rest of the market is just a full, I don't know what to say about the rest of the market. All I know is that we're kind of double topping here. There's no strong scenario that says that we're not. We kind of have a cup and handle forming, so there is potentially bullish scenario, but it looks like we're dropping for a bit. If we lose this bottom, we're in for a pretty significant recession, and unfortunately, I don't think Bitcoin's going to escape it. But if Bitcoin can kind of have one more run, one more big push, almost in every scenario, when Bitcoin hits that about 8 to 6 months before the halving, it's pulling back pretty hard. There's a pretty good solid 6 months of pullbacks, and it's the year of the chop. This is what a year of the chop looks like. So we deal with that choppiness leading up to the halving. 2024, whatever recession we may have in the world, it may be wrapping up or starting to strengthen by 2024. And by then, Bitcoin halving will be here, and we're going to be flying. So there's a lot of fun things to look forward to. All of my stuff is fairly short term. In the next month or two, I'm expecting us to pull back, and then we'll probably strengthen. And then we'll probably be at our last point for a pretty decent time. And then we're waiting for the halving. And then we got to put on the rocket boots. And we're going to get out of here. Okay, thanks for being here. You guys are so awesome. And we will catch you next time. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.